Hi students, welcome to CA Final Law Revision Class and Test Series batch. So what we are going to do here is, I will not teach you the subject, I will just revise past examination question, RTP, MTP and how to answer the questions when it comes to exam. So once we done with this session, you have to write the test. For example, today we are going to see dividends, books and auditors. So today's class it will be for old syllabus. So we will do one revision of past examination question, etc., RTP, MTP. So immediately you have to write the test. I will be sending you the test question papers in your mail ID. You have to write the test and send it back to me. So this is the idea of this session. Now we'll start. The first question is, can a shareholder in AGM recommend higher rate of dividend more than what it is recommended by the board? Now see, shareholders can say yes or can say no. Shareholders cannot modify. They can say yes or no. In some author's book you would have read like, no, it cannot be increased but it can be decreased. It is not so, because in regulation of table F it is mentioned it cannot be increased. It never told it can be decreased. So actually speaking, I have attended many AGMs. In AGMs they can say yes or they can say no. That is what. So they can pass the resolution or they can fail the resolution. They cannot modify anything. So this is the first question. Then the next question. So this is a general knowledge question. This is nothing. They will not ask this examination at all. Next is, can company transfer any percentage from the profits to its reserves when it declares dividend? Now the answer go like this. As per section 123, payment of dividend section, there is no hard and fast rule that you have to transfer any percentage, fixed percentage from profit to reserves. In 1956 Act they have mentioned this percentage, but in 2013 Act they have removed this. So it is absolutely the wish of the board to transfer any amount of money from profit to reserves when they declare dividends. The next question is, where there is no profit in the company, can they still declare dividend from reserves? So when they are declaring dividend from reserves, in case of final dividend, as per section 123, read with the rules of section 123, in case if you are going to declare dividend from reserves, then you have to follow 4 rules. Rate rule, highest of average of last 3 years. Withdrawal rule, 1/10 of paid up capital plus free reserves. Usage rule, first use it for adjusting current year's losses. Balance rule, at least the reserve should be 15% of the paid up capital after withdrawing. So after following these rules, you can pay the dividends. Can company provide higher rate of depreciation than what it is prescribed in the Schedule 2? Answer is, Schedule 2 is minimum rate of depreciation, but in case if you are doing a technical valuation, you can even decrease as well as increase these rates. Next, board failed to pay dividend warrant to certain shareholders within prescribed time limits. Shareholders filed a suit claiming 20% interest. You should write, as per section 127 of the Companies Act 2013, shareholders has a right to claim 18%, but not more than that. Dividend declared on last day of May of that year, but paid on 15 days after the declaration date. Is it valid? Answer is, as per section 123, dividends can be paid up to 30 days from the declaration date. So they have paid within 15 days. So it is well within the limit under section 123 of the Companies Act 2013. Next, company adjusted the dividend against the dues received from the shareholders. So there are some dues from the shareholders to the company adjusted those dues with this dues. So is it okay? The answer is, see, as per section 127, when the dividend payable is adjusted with the dues, it is well within the act. So there is no penalty under section 127. Say for example, call money is due from the shareholder, it can be adjusted. What is the interest for non-payment of declared dividend? The interest is 18% under section 127. State whether the company has a lien on partly paid up capital. See, what is partly paid up capital? Partly paid up capital, in case if the company has issued a share, say face value 10 rupees, and they have not yet called some portion of it. Now they are calling it and it is now in arrears. So if the dividend is in arrears, if the call money is in arrears, these people cannot vote. Now whether the company has a lien on partly paid up shares, in case if they are called the money and these people doesn't pay the call money, now for forfeiture you have the right. No, start with lien right. First of all, you cannot vote. Second, the company will forfeit, so they have lien rights on these shares. Next question. Shareholder directed the company to pay the dividend in the bank account, but there are some technical error encountered by the company, hence the company cannot able to deposit into the bank account. Now when the shareholder give instruction to the company to deposit into the bank account, in case if the company found any error, they have to intimate the shareholder under section 127. If they intimated the shareholder, there is no issue. If they have not intimated the shareholder, then they are liable to pay interest under section 127, that is 18% interest. On account of dispute, the dividend was not paid to the shareholder. Is there any problem whether the company has to pay interest? Under section 127, they are saying, if the company is not depositing the dividend declared on account of dispute, there is no penalty. Read with section 126, which is abeyance sections. So you should write, as per section 126, read with section 127, the dividend has to be kept in abeyance if there is any dispute. See, whenever you are writing an answer, you should split the answer into three parts: provision, analysis, conclusion. Provision, you have to write section. Analysis, you have to write what you have understood in this question and give with reference to the section. And conclusion, it's like 2 lines, say yes or no, possible or not possible. Whether can company declare dividend in case they defaulted the deposits, which is accepted. In case the company defaulted the deposit accepted, unless and until they repay all the deposit or they make sure that there is everything is settled, no default, till that time they cannot pay dividends. Last 3 years dividend rates they have given as 8%, 10%, 12%. Company incurred loss in the current year, but the board wants to give dividends. Discuss. Now, if the board wants to give interim dividend from, say, accumulated P&L, the rate is average of last 3. If the board wants to give final dividend from the accumulated reserve, accumulated surplus, I repeat, final dividend from accumulated surplus, they can give at any percentage, no issue. But if they want to touch the reserves only, they have to follow the rules, and that first rule is average of last 3 years rate. Transferee purchased shares 10 days after the company declared the dividend, but company failed to register. 10 days before the company declared the dividend, but the company failed to register the share transfer. Who will get the dividend? See, it is a duty of the transferor. In case if we sold the shares as cum dividend price, it is a duty of the transferor to give the dividend to transferee, because it is a right of the transferee to receive the dividends if he purchased the shares well within time before declaration or before record date. Now, it is a duty of the company to register the share transfer within 1 month generally, and it is a duty of the person, the transferee, to deposit the transfer deed within 15 days from the date of purchase. Then, company declared dividend and many shareholders have not claimed the dividend. State the duty of the company, what they have to do with the unpaid dividend account and for what purpose it can be utilized. See, once the company declared the dividend, they have to transfer the dividend to a separate account called dividend account, and in that account they have to keep that for a period of 30 days. In case if there is any unpaid dividend after 30 days, they have to transfer to a separate account called unpaid dividend account. There it should be lying for a period of 7 years. So this amount cannot be utilized for any other purpose. It is a liability of the company in fact. What is the purpose for which EPF funds can be utilized? EPF funds, which is maintained by central government. EPF is formed under section 125 of the Companies Act 2013. Okay, after forming this EPF, central government initially given some grants and maturity deposits, maturity debentures, and share application pending allotment for years together. Then dividends, which is not claimed for a period of 7 years, everything will come here. They will utilize this fund for investing and creating awareness. In case if the government earned some money by investing the money, this monies in government trust bonds, etc., those interest will not be given to the shareholders. Okay, only the principal money will be given to the shareholders in case if they come and claim. Can a company pay dividend to the shareholders out of the guarantee money provided by central government? Can such amount be distributed to the shareholders? As per section 123, one of the source for declaring the final dividend is this money, which is a guarantee money, which is given as a revenue grant by central government or state government. AS 12 allows it, revenue grant. So government money can be utilized for payment of dividends, because they want to support the companies if they started in backward areas, etc. Dividend declared by the company and dividend warrant dispatched to all the shareholders except one or two, because the company felt there is some title dispute. What to do? So this dividends which is in dispute, etc., they have to transfer to unpaid dividend account. So this is called keeping it in abeyance. The rights, bonus, etc., everything will be kept in abeyance. Next question. Explain how the company has to deal with unpaid dividend account and consequences. I already told you, as per section 124, you have to open an unpaid dividend account and you have to transfer within 7 days of declaration of after 30 days of declaration of dividend. That is, first dividend declaration, then within 30 days you have to make the payment, else within 7 days you have to transfer to unpaid dividend account. There it will be lying for a period of 7 years. Next question. Dividend declared at the rate of 12%. Some shareholders holding shares which is partly paid up, not paid their call money. The money due to the company is lesser than the dividend which is receivable from the company. Can the company adjust this? Answer is yes. Under section 127, the company can lawfully adjust the dues from the shareholders. The next question is, shareholder transferred shares before the record date, but the name of the transferee got recorded after the record date. Now what to do? If the shares got transferred and the transferee has sent the papers within the time limit, that is 15 days, then it is a duty of the transferor to transfer the dividend which he has received, because he would have sold at cum dividend price. But generally company will give to only the person whose name is there in the record date. As on date, they are in the share register. Next, company has declared dividend, interim dividend 2 times, and after the second time they want to withdraw the declared dividend. Answer is, once the dividend is declared, whether it is interim or final, they cannot withdraw. Once it is declared, it becomes the liability of the company. They cannot revoke it. Next question. Dividend remained unpaid for a period of 7 years. Company decided to transfer to a demat account of EPF on the last year, that is 7th year. What to do? See, before the 7 years getting over, at least 3 months before, you should give a public notice, and after the 7th year, within 30 days you have to transfer to EPF. And SBI and PNB, there are 2 banks with which central government is maintaining demat account as well as a current account, where you have to transfer the money as well as the shares. When the shares is getting transferred, the company secretary of the company will sign on behalf of the transferor, okay, because the transferor is not traceable. On behalf of them, they will sign, and this will be transferred. One company never declared dividend in past. In current year, they want to declare dividends from accumulated profits. Whether they can do? See, company can declare dividend either from the current year's profit or accumulated profits, no issue at all. In case if they want to declare interim dividend from the accumulated profits, rate rule has to be maintained. In case they want to declare final dividend from accumulated profits, even that rules need not be followed. Final dividend rules to be followed only when they are declaring dividends from reserves. With this, we completed this dividend chapter, past examination RTP questions. Now, I will be sending you dividend chapters question in your email ID. You have to write the dividend chapters answer. So, your answer should be like this: provision, analysis and conclusion. You have to write 1 full page answer. It's not like half page or quarter page answer. I don't want your conclusion, I want your answer. You have to justify your answer. The conclusion is only 2 lines. You have to write, you have to justify your answers. Okay, so this is to start with. I can say this is a trailer of our revision and test series batch. Hope you are going to utilize this so much. Now the next will be books of accounts, and next will be audit and auditors, and after which we will start for both syllabus, that is new as well as old will come. Thank you so much.